we're in the zone where ahead of the US general election, we tend to see liquidity pick up. Janet Yellen tends to drain the Treasury, tend to drain the Treasury general account a bit because they've just taken the money in from tax season. We've got potential intervention. I was talking about this with Ovi and Mando earlier on Rect Vision. Chance that they intervene by selling dollars. That will bring dollars into the system. There's lots of liquidity, rate cuts, all of these things to come. So we're coming into the liquidity cycle. The seasonality of this in crypto tends to be strong into about August, September. Then it goes choppy because of election, because nobody knows where it's going to go, what it's going to mean, and then tends to resolve itself after the election with the extended banana zone.
Expectations are mounting about the ongoing cryptocurrency bull market and what's ahead for crypto asset prices in 2024. After several spot Bitcoin ETFs were approved by the US Securities and Exchange Commission in January, hundreds of institutional investors, including hedge funds, pension funds, and insurance companies, showed a strong appetite for the new products and raised expectations for prices and the bull market. Many believed the steady stream of inflows into the ETFs would continue, and Bitcoin's prices would continue to rip higher. That did happen between mid-January and March, with Bitcoin first hitting the 2021 all-time high of $69,000, then making new all-time highs of $73,000 around mid-March. However, everything has pretty much cooled since then. Despite recent price movements and the general drop in market sentiments among crypto investors, Real Vision founder and CEO Raoul is still bullish on crypto asset prices in 2024 and beyond. In a recent video featuring Pal and Julian Bittel, head of macro research at Global Macro Investor, the duo discusses unfolding macro events and their impact on the crypto bull market. According to Pal, the banana zone, the period of every crypto bull market, when prices rise significantly, is still very much in play. Pal believes the full transition from macro and crypto spring to summer will occur between now and September, and crypto asset prices will make strong recoveries before the 3 months lapse. He is predicting a few more months of consolidation between September and November, which he says will be caused by market uncertainties regarding the outcome of the elections. However, after that, Pal envisions the full transition from summer to fall, which will be even greater for cryptocurrencies and the overall digital asset space. As we present clips from Pal and Bittel's Macro Masterclass, please take a little time to like this video, subscribe to the channel, and turn on the notifications bell for more videos like this. You can also join the conversation by dropping your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks for the support and enjoy the video.
Andrew Coulson, do you think institutional participation in crypto will alter the characteristics of the banana zone, tempering or exaggerating the cycle extremes? Look, the larger crypto gets as a space, the larger the number of investors that need to come into it to increase it. It's a percentages game. So it's a $2.5 trillion space. If you bring in $250 billion, that's a 10% increase in net money in. Sure, it moves it. But that's the same as if it was a $250 billion space and you brought in $25 billion. So I don't think the institutions change it, but it does mean that there is general acceptance that this is an investable asset class, so it brings in more people. So I think it's not the institutional flows per se, but more people. Now, the question is do we get a blow off top at the end of this cycle? That is definitely possible. It just depends how the cycle plays out, what liquidity does, and if people lose their minds. It's animal spirits that creates a bubble. It's generally not the business cycle that does it. It generally decouples from a business cycle if there is a bubble at the end of it, and we just can't know. The one thing that may change the market somewhat is if when options start trading on the CBOE. We'll have to wait and see whether, or the CME or whatever, we'll have to wait and see what that does. My view is we have been consolidating for 3 months, and the work that Julian and I have done suggests that the next move is higher. Julian mentioned we're in macro summer environment, which I understand is an environment of rising growth and inflation. It's the rate of change of inflation. It's the second derivative is one thing you need to understand. However, I'm struggling to understand how this can be, as most countries, including the US, still has an ISM less than 50. So it's still shrinking, although improving.
So no, I mean, if you look at over the last 6 months, and again, I would encourage you and everyone, as I say, we just published the latest MIT report an hour ago or so, and I talk a lot about unemployment and PMIs. So, 60, actually, I think it's closer to 80% of PMIs are on a 6 month basis are up, and over 50% of them are back in expansion territory. So, that's not true. And also, when you look at China, China's been above 50 for quite a while now, as has Germany, as has Sweden. And actually, when I talk about Sweden, and I put a chart in there on this, Sweden's one of my favorite ones to track, and I've written quite extensively about this in GMI, and it's largely because it's just a small export-oriented country, which means that when the business cycle starts to improve, Sweden's one of the countries where you see it first. And the chart that's really bonkers in the latest MIT update is when you look at Sweden PMI new orders to inventories versus the ISM, which of course would be more leading versus the ISM because of the dynamics I just mentioned, and it's gone nowhere but up. And the other thing I'm going to say is with the global PMI in May, so we're still awaiting all the PMIs now, right, for June, but the global PMI accelerated to the fastest pace in over 12 months in May. So the cycle is improving. It's just some macro is sometimes like watching paint dry. It can be a very slow moving process.
Powell's banana zone thesis is based on the cyclicality of global liquidity, that is, central banks' balance sheets, especially its expansionary and peak periods. Powell believes we are nearly upon one of those periods, with liquidity conditions having bottomed out and expected to start rising rapidly at any moment and continue until they peak around June 2025. A strong indicator he uses to predict changing liquidity conditions is the Purchasing Managers Index, a survey-based indicator of business conditions in economies across the globe. Powell believes PMI lags the overall economy by a few months, and with manufacturing activities now improving across the globe, asset prices should quickly begin to pick up soon. The S&P Global Purchasing Managers Index data revealed that manufacturing activities picked up in May in most developed economies. More than 40% of global manufacturing PMIs are in expansion, almost double the 25% recorded at the beginning of the year. May was the strongest month for manufacturing activity in the United States since the start of 2023. Similarly, manufacturing activity in the United Kingdom hit its highest peak since July 2022, and Japan recorded its first move into expansion territory in almost 12 months. Powell and Bittel believe this data will improve even further in June, showing that these economies remain quite resilient, despite the events of the past few years. Powell believes this resilience will continue for much longer, as central banks cannot allow even the tiniest bit of trouble before they come to the rescue. Here are more clips from the video.
We're talking about public debt in the US. We know that at least out until 2030, the only solution is more cowbell, right? Meaning more liquidity. So what's going on is the Fed is just debasing their currencies because of demographics, and then debt growth. So public debt growth in excess of GDP just gets monetized. And that is the everything code, in fact. And so long as that is happening, I think it's very difficult to have a currency crisis. And then Raoul and I are of the view that post 2030, maybe it comes a little bit early, but then productivity starts to rise. That solves the trend rate of GDP. Then central banks can step back, and then debt levels should at least come down, I suspect. But I don't think there's a high probability for a currency crisis within the current setup. Raoul, what do you think?
Well, a currency crisis of whom against what?
True.
The currency crisis, if there was a currency crisis on a globalized level, that's a debasement of fiat currency, which drives up asset prices. Are you likely to see the euro have a currency crisis? I doubt it. Will it weaken, strengthen over time? Yes, it's going to move around. Is the US dollar going to have a currency crisis? Almost impossible because of the dollar shortage. So I don't see currency crisis. Yes, when you get to recession, you will see breakages like we're seeing with dollar yen. You can see it somewhere else. That's a dollar shortage issue. So I don't see that. In fact, anything currency related tends to be good for equities if it includes liquidity, as Julian said, more cowbell. If the odds of a recession increase for some reason, or the Fed are cutting rates, you're going to see more liquidity come into the system because they've been given the green light to do so. So these things are positive, not negative. I know everyone fears the recession word. Don't forget the last time around it happened, it was because of COVID.
Yeah.
Right before that, we haven't had a recession since 2008. And arguably, we wouldn't have had a recession if we didn't have COVID. So everyone remembers COVID, recession, stocks fell. In this environment, it's highly unlikely because we have the cowbell to debase the currency that pushes up asset prices. So the slower the economy is, the more the probability of more cowbell, more liquidity comes into. I don't believe that we will be looking for a recession in the next 2026 down cycle. So we will more likely to see withdrawal liquidity, and markets like the NASDAQ may be trading down 20%, which to me is a sideways market, as opposed to the down 30, down 40% that we saw in 2022, which was driven by this inflation pulse. So it's kind of a pause that refreshes that may go on for a year before the next leg higher, which gives me a probability that we may end up with a full bubble cycle going into 2030, but we'll have to wait and see.
As central banks start cutting rates and easing up on their quantitative tightening policies, Powell predicts a most exciting period for the cryptocurrency market, with crypto asset prices expected to rise sharply or absolutely go bananas. This is the banana zone, and Powell expects it to start at any moment. Unlike others, Powell is quite optimistic about the US and the overall global economy, and his optimism stems from central banks' inclination to come to the rescue whenever there is the tiniest bit of trouble. They simply can't afford another global financial crisis, and printing periodically is the only way to keep putting it off. Powell believes this cycle will continue until at least 2030, when he predicts AI and robotics will change the world completely. Until then, investing in cryptocurrencies like Bitcoin, Ethereum, and others will help investors stay ahead of currency devaluation and debasement. Do you agree with Raoul Pal's analysis and his expectations for the cryptocurrency market in 2024 and beyond? Please share your thoughts, comments, and observations in the comments section below. Also, give this video a thumbs up, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching our videos.